Hello friends, before we get started, just another reminder, we've got the live stream tomorrow 5 p.m. where we are going over the Chart Guys Swing Report, what it entails, what it's comprised of, and 50% discount offer for those who tune in. It'll be live on our main YouTube channel, November 3rd, tomorrow 5 p.m. Link is in the comments of this video. Check it out. Hey everyone, checking in on the markets after Powell has gotten through with them. At least for today. So as I mentioned, tomorrow is going to be key as far as reaction and follow through, but very clear reaction today for the bears. So looking at the S&P 500 on the daily time frame, this is the futures chart. We do still have a support level, certainly not holding my breath that it is going to hold. It's holding at the moment, but we had a higher high lacking follow through and we are rolling over. And it's due to the NASDAQ and big tech. We know the NASDAQ failed resistance and now it's rolling over, dragging the S&P 500 down with it. Weekly time frame, we know that bigger picture, if we're going to see a more notable bottom put in, we have to confirm a weekly uptrend. The question is, when is the last time SPY has confirmed a weekly higher low and higher high? And it was right here, this little baby higher low and higher high. Other than that, it hasn't happened. So even here, this is just all one move. So we would have to see, it's not game over for the bulls if weekly consolidation starts from here, but I don't have a ton of confidence that the bulls can confirm a weekly trend change. This retracement is 50%, so it's a possibility, but again, I'm going to have to be skeptical of bulls at this point, and we would need to hold the low of where we came from and then break the high. Again, this is assuming we lose the daily trend. So if we lose the daily uptrend, weekly low or high set, we then have to hold the fear low and confirm a weekly uptrend for the bulls to prove anything to us. Otherwise, the bears stay comfortable. And the last few rallies on the daily time frame have all topped out fundamental data. Fundamental data, and I guess you can call today fundamental data from Powell, 75 basis point hike, not really changing his tone whatsoever, so staying hawkish, and bulls that were hopeful of something shifting, not getting what they wished for. So hourly downtrend is our guide. Tons of space for an hourly lower high to be the result of the next bounce. So bears want to just see a little bit more follow through to lose the daily uptrend. And then from there, once we lose the daily uptrend, bears will want to confirm the daily downtrend to then be back in full control. If we confirm the daily downtrend to the bears next time we bounce, then that's pretty much the bears putting an exclamation point on regaining control. The NASDAQ, as we know, has been weaker. Again, the red flag was the inability to break resistance here, highlighting over the last couple of days how important that was. And now we've lost, well, we're right at support here as well, aren't we? We're right there. So again, both the NASDAQ and the S&P 500 on the verge of losing the daily higher lows. But we can see the NASDAQ is rejecting from weekly EMA 12, and the NASDAQ is much more likely to be a weekly bear flag, where we have this bounce retracement is 382 right off of it. And it's a double top and we're heading back towards the fear low. The only way that the S&P 500 could hold the low if the NASDAQ does not is if the NASDAQ confirms the bear flag with zero follow through. But again, for now, much more of a bear lean after today's action just because the bears have control of the hourly and we're watching for potential weekly consolidation. If we have a solid green day tomorrow, then I'm going to be unclear. And I'm going to take a step back and wait for clarity. But obviously, bears with an exclamation point today. We had the reaction to the FOMC was a rising wedge. We had a bull break to a higher high, straight into a pullback, and then a bull break to a higher high, straight into the rising wedge breaking bear. And you got to be so fast. I was live streaming and said, this looks like a 1 minute rising wedge. And before I could even draw it out, it was already breaking. It was literally a 20-second window from when I recognized that it was forming to when it actually formed. So I didn't even get to grab a bearish position on that as I was trying to draw the pattern as it was playing out. So again, you got to be really fast. And for me personally, FOMC days, as a full-time trader, these are days where I trade way less. Yes, there's a ton of volatility, but think about it. If you are a full-time trader trading on a daily basis, today is an anomaly day. And the anomaly day happens once every however many months or once however many times a year, and it's the very small minority. So if I have a system that I can have consistency on All the other days, I'm going to skip the days that have the anomalies. And, if you want a home run or if you want a big win, then you're looking forward to FOMC days because of the volatility. If you want your steady consistency, you are skipping the FOMC days and waiting for things to return to normal. So I never trade significantly on the FOMC days personally because, again, I'm in base hit mode where I'm just looking for small wins on a daily basis and for consistency, and that does not come with FOMC days, generally speaking. Another factor, another thing to be watching for, if the bulls could miraculously hold support from here, we then have to be watching for a head and shoulders. This is the 12-hour time frame on the futures chart. So pretty much at every turn, the bears have regained momentum. Bulls had momentum for a couple weeks of this bounce, and the bears are on the verge of taking back over as far as short-term momentum. The dollar set a little higher low and higher high. Again, this is another red flag for market bulls. The red flag is we held weekly EMA 12. We confirmed a downtrend with zero follow-through. We held weekly EMA 12 as we have all year, and we have been bouncing ever since we broke weekly support. It's been nothing but up for the dollar. And we're just going to be watching, does the broader market break for your lows? Does the dollar break recent highs? So we have a short-term support level to be watching now at 110.42 and double top in the 113.90s as far as resistance, but strong reaction to the dollar, weak reaction from the market. Semiconductors, big drop. They've been grinding up, watching for the potential of a weekly lower high here as well. Big picture, this bounce did not do much at all to this downtrend. Semiconductors still have some earnings. AMD already reported it's a weekly bear flag, and NVDA has yet to report. It's holding on a bit better. And again, we're going to scout a daily high or low. For me on NVDA, anything above 108.13 is a daily high or low. But we're going to have to see a big save from the bulls to save today's reaction. Tesla still looking like a weekly bear flag as we were talking about the past couple of days because the daily bull breaks lacked follow through and it's just 198.59 as support. It's the only thing we're looking at, and it's a weak weekly bounce. And again, most names heading into tomorrow have tons of space for an hourly lower high to be the result of the next bounce. And that is where we stood this morning as well. You look at the drop yesterday and names like Amazon and Google, all these names had so much space for hourly lower highs. And these names are getting trashed. These names are very important for the broader market and the weight that they have in SPY and in QQQ. And we can see Google is in free fall right now and Amazon is in free fall. If Amazon gets to monthly oversold, I am going to have to start nibbling in my IRA into my first long Amazon position ever. But we would need to see a drop down towards $80 for that to take shape. But again, it's just thinking a decade out. If Amazon's going to hit monthly, and at that point in time, it would be monthly, weekly, and daily oversold all together, I've got to grab something. Again, it's just a lot of cash sitting in that IRA. I've got to put it to use at some point. And if I'm not going to put it to use in extreme fear, when am I going to put it to use? So many decade horizon there, but still a ways to go to get to monthly oversold. Healthcare pulling back. Again, the save for the bulls would be if XLV holds daily EMA 12, if XLF holds daily EMA 12, then these charts look fine. There's nothing wrong with these charts for the bulls. There's a lot wrong with the NASDAQ. And in this market environment, it is tricky. We've been in market environments. I've been trading really, really full time the last 7-8 years. And the market environment, often everybody's doing the same thing. I can remember the grind up in 2016, 2017, where it was fairly boring on a day-to-day basis. There wasn't a lot of volatility. We were just grinding higher and everything was doing the same thing. Nothing was different. And so if I knew what SPY was doing, I knew what everything was doing. And in this environment, it is very different, where you compare the financial sector and the NASDAQ right now, and they are a very significant difference with how they are currently set up. So if I'm a bear, I want to be focusing on the weaker sectors. If I'm a bull, I want to be focusing on the stronger sectors. And it is still possible that XLF and XLV come out of this bearish FOMC reaction with a daily chart that is still bullish. And so I'm going to be watching this retracement size. And again, it's just the EMA 12. It's going to align with 382. And so for me, if bulls are going to be saved here from this bearish FOMC reaction, it's going to be because XLF and XLV set a healthy daily high or low. It is a possibility. I'm not holding my breath. I'm not positioning for it. It's something I'm going to be observing. And if I see signs of it, then I will make note of it and react to it. IWM, big time drop. So growth names selling off really hard on the FOMC here. Anything above 168.19 is a daily high or low. But the pullback here is already more significant in the sense that, just as a comparison, we could see IWM, if this were the bottom, which we don't have any confidence in, but we could bounce 2%, 3% and still form a lower high from where we came from. If you look at the financial sector, if we bounce 2%, we're heading to a higher high. We're right up to that resistance. It's fairly similar, but my point is the retracement on these other sectors is less significant than retracement in QQQ and IWM right now. So long story short, I am bearish in the short term as long as we're in an hourly downtrend, but I'm open to the possibility that healthcare and the financial sector can save the S&P 500 from getting really ugly on this reaction. QQQ's got to get its act together. Big tech's got to find a bottom. It's really struggling, but I am open to XLF and IWM staying okay on the daily. XBI was a mess today. We headed into today, and this is another reason why I skip FOMC days as far as actively trading anything significant. But we've got a beautiful equilibrium here. We broke resistance. No, it was the other way around. We broke support straight into a resistance break, straight into a support break. So you can take a beautiful equilibrium and turn it into a sloppy mess on a day like the FOMC reaction. And so again, if I want consistency, if you tell me that the majority of equilibriums are going to react like this, then it's a useless pattern. Meanwhile, the equilibrium is a very important pattern for my trading success. And so again, I skip days like this. Biotech sector pulling back on the daily. Support from here is 80.47. And again, it's just bull breaks with no follow through, which is keeping a rising wedge narrative alive. I don't really have a good support line that I like. It would be like we would have already broken bear, but still a daily uptrend. Tons of space for an hourly lower high to be the result of the next bounce. Cannabis names, inside bar bear break for CGC. We started strong. We rejected right off of 362 resistance, which was from yesterday. We topped out on a morning bounce at 362. So double top to the penny, and then we rolled over. So cannabis names pulling back in market weakness. Double top here, 383, 385, 389, triple top we'll call it. So again, we can look for a daily high or low, but just hard to be bullish here. US cannabis, really weak. Hard to be bullish in this market environment when you have a day like today, shaking things up and giving, essentially what today does is just gives bears their confidence back. Bears have been lacking confidence the last 2 weeks in the S&P 500, but they're going to regain it after today. The only way that bulls can save it here is smacking down those bears that are just gaining some confidence tomorrow. Gold rejecting from daily resistance, back down towards support. Bulls still not proving a thing. Weekly downtrend forever. Miners and silver stronger, but obviously similar in terms of their weakness. So we double topped with the high of yesterday on silver. Still a daily uptrend, but close to losing it. 1890 key support. The energy sector has been the lead bull sector. It's still a daily uptrend. We're watching 87.65 support. Oil confirmed the daily uptrend. So all about 92.34 still. Bulls just maintaining higher lows. Trying to confirm the weekly uptrend with a break of 92.34. In natural gas, nice save. V-shaped bounce back to resistance, which we are rejecting from, at least initially here, this resistance zone. But the size of the bounce is giving the natural gas bulls a lot of space for a 4-hour higher low to form compared to 515. So very wide range here. And if this 4-hour pullback happens overnight, we'll be watching for this tightening 4-hour equilibrium, and we'll watch how much retracement do we pull back on the 4-hour pullback. So that's where we stand. I do have some protection On the initial bull reaction to the FOMC, I just grabbed a little bit of SQQQ, knowing that my long-term IRA is all long and wanting to protect against that a bit. But overall, definitely have to see XLF and XLV keep daily EMA 12 for bulls to keep hope that this weekly bounce can continue. NASDAQ is a lead bear on a daily basis until we see this change. If you're looking bearish, look to the NASDAQ and related names because QQQ divided by SPY is at the lowest level that we've seen. The NASDAQ has not been this weak compared to the S&P 500 since back in February of 2020, which was, that was the CVID, wasn't it? Right around there. It's notable. It's very notable. You can see the tech sector weakness. I mean, this is the 6-month chart. We've never seen anything like this aside from the tech collapse here. So this year is the weakest that the tech sector has been comparative to all other sectors in the S&P 500 since the tech bubble. So tech led the way up for 15 years, and it's leading the way down on this pullback, and it's definitely a heavy weight. And I'm very curious to see if those that are in control of SPY ETF holdings, if they're going to be doing a whole lot of shuffling now, because we've seen tech dominate the percentage holdings of that ETF for so long, and we might be seeing that shift here where maybe they put a little bit more weight into healthcare and financial sector holding up a little bit better, and maybe they balance things out a little bit. It definitely made sense. You know, if I'm making a long portfolio as a hedge fund, for example, you want to be heavy tech because it is leading the way up. But it's a different market environment. Things are changing. As I mentioned in a recent video, you know, maybe when the tide goes out after this market environment and this big shake up, maybe it's not tech that's the major player in the S&P 500. We'll see. Who knows? We can only speculate. But overall, bulls need to be cautious and watching XLF, XLV daily EMA 12 very closely the next 2 trading days. Two good things. Appreciate you watching. Check out the webinar tomorrow for the Swing Report. And we'll see you soon.
What do you want? You hungry?